Reliance has reported quarterly numbers and they've come in below expectations. Shomit, my colleague, is here and he's here to break down the numbers for us. Shomit, the expectation was that retail and telecom would really outshine the O2C business, but we're seeing a dip of as much as 24% as profits are concerned. Do tell us how they stack up, and I'll talk to you about Reliance Jio in a moment. But first, about what Reliance, the big boy, has really reported by way of its second quarter.
Come in on the EBITDA front, which is the most important number for Reliance Industries. Now, Street was expecting the company's EBITDA to be close to 32,200 crore rupees, but the company has reported an EBITDA of only 31,200. So a big 1,000 crore miss is what we are seeing on the EBITDA front, because of which the company's margins have also slid to around 13.6%, and the net profit has come in lower at close to 13,700 crore rupees. Now, this miss in consolidated numbers we are seeing only because of a weak performance coming in from the O2C segment, that is the oil to chemical, which has the refining and the petrochemical business of the company. Now, these numbers were weak because of the windfall taxes that were imposed by the government, also given the fact that the Singapore gross refining margins were continuously falling throughout the quarter, and the third reason was there was a shutdown, because of which the refining numbers were weak. Now, coming on to the petrochemical division, on that front, if you see, the demand was muted in this quarter, and along with this, the product spreads were also lower compared to last quarter, and hence the petrochemical division has also reported a weak set. To sum it up, the O2C numbers were weak, but when it comes to the retail business has yet again outperformed, and the number has come in ahead of what the street was expecting. Street was expecting the EBITDA number to be close to 4,200 crore rupees, but the company has reported 4,400 crore rupees of EBITDA, and this is on the back of strong expansion, higher footfalls, and monetization of the new stores that we have been seeing on the retail front. Also, the oil and gas exploration business has reported pretty much good set of numbers. So on the consolidated basis, the miss we have seen is specifically on the O2C segment of Reliance Industries.
All right, Shomit, and do tell us about Reliance Jio, because we were looking at the kind of ARPUs that they've reported, how they fared over the second quarter, being the first set of numbers that is reported with the younger Ambani at the helm of affairs.
Well, for Reliance Jio, if you see, the numbers are pretty much in line. However, there's a 1% miss that has come in on the revenue and the EBITDA front, but that is largely because the street was expecting Reliance Jio's ARPU to be at close to 179 rupees, but the company has reported an ARPU of 177 rupees. However, it's pretty much in line with what the street was expecting. But if you see the revenue growth of the company, that is also the lowest in the last 6 quarters because of this lower ARPU that has come in. But the company's EBITDA margins has been at its highest ever of 51%, and that is on the back of strong cost control, lower access charges, lower spectrum cost, and lower other expenses that the company had in the second quarter of FY23. However, the company was also able to add subscribers in this quarter, which is also a good sign. However, other than that, if you see, we are still awaiting more details on how the company plans to monetize 5G going forward. So that is one thing that the street still wants to know from Reliance Jio call that is there post-market. But overall, if you Reliance Jio numbers, they are pretty much in line with what the street was expecting.
Fair enough. Thanks very much for walking us through Reliance numbers.